Good afternoon, everyone. Thank you for joining us for today's webinar. My name is Carly with Wesk. For those who are unfamiliar, we host a free webinar usually every month, but now on a weekly basis. These webinars are recorded and can be viewed anytime at our website. Today, our topic is the difference between accounting and bookkeeping, presented by Natalie Stiles from Stiles Accounting and Tax Services. If you have any questions during the presentation, please just write them in the chat box, and I will let Natalie decide if she wants to answer them during the presentation or at the end. Thank you, Natalie, for joining us today. Please start whenever you're ready.
Hello, everyone. Thank you for joining me today for today's webinar entitled Accountants and Bookkeepers, One and the Same. As Carly had introduced me, I'm Natalie Stiles. I'm a chartered professional accountant and the owner of Stiles Accounting and Tax Services. So I'll just take a brief moment to tell you a little bit about myself before we get started. I've worked in the accounting field for over 20 years with a variety of businesses, and I found my passion in providing practical advice and guidance to small business owners and startups in the areas of accounting, bookkeeping, and tax. I firmly believe and practice that tax concepts and financial results should be discussed in an easy to understand way so that business owners can make informed decisions. I consider it a privilege to serve Saskatoon and the surrounding area and to present today's webinar to you. I will mention now there will be an opportunity at the end of my presentation for any general questions you may have. If you have any questions specific to your business or your particular situation, I encourage you to email or call me directly. My contact information will be available at the end of the webinar, and I'd be happy to answer those questions for you. With that, let's begin. I just see we've got a bit of a delay here with the slide coming. Oh, here we are. All right, so here are the topics that we're going to cover today. We're going to go over the difference between bookkeepers and accountants, the benefits of having a bookkeeper, the benefits of having an accountant, how accountants and bookkeepers work together, the risks of doing your own bookkeeping and taxes, and finding the best fit for your business. So let's talk first about what bookkeepers do. Bookkeepers record the daily financial transactions of your business, providing the starting point for the full accounting process. They take your source documents, such as invoices, receipts, and checks, and use them to create detailed financial data. This is a key component in building a strong foundation for your business. So that's just sort of high level what bookkeepers do. And then let's talk briefly about what accountants do at a high level. Accountants take the financial data recorded by the bookkeeper and create big picture financial information that the business owner can use to make decisions. The role of the accountant is to analyze, interpret, summarize, classify, and report financial information with a view to advising the business owner and adhering to accounting principles, standards, and requirements. So from this visual, you can see that bookkeeping provides that solid foundation on which the accounting advice is going to be built on. And this just gives you a visual as to the flow of the services and where things start. So this is starting with your source documents. The bookkeeper will take and organize those and record them and produce financial data, which the accountant will pick up and analyze, interpret, and provide you with reports and advice. So just high level, and we'll get a little bit more into the detail of what each of these service providers offer. So here are some of the tasks and services that bookkeepers typically provide. They would record your invoices to your customers. They would record payments from customers. the purchases and bills from your suppliers and the bill payments to those suppliers. Some bookkeepers process payroll for you, and they reconcile your accounts to make sure that everything is being reported properly. They typically calculate and file government remittances. And they do prepare some initial financial statements from the bookkeeping software that they're using. Accountants have some different tasks that they provide and services. They prepare the adjusting journal entries and the final financial statements from the information that they receive from the bookkeeper. They provide assurance reporting, such as audited financial statements. They analyze and interpret financial results and can provide you with some strategic tax planning. They typically prepare your corporate and personal tax returns. They can also offer a good amount of advice, guidance with startups, or what business structure is the best for your business. Is it a sole proprietorship, a partnership, or a corporation? They can go through the pros and cons with you of each of those and find the best fit for you. They can also walk you through the details of a purchase or sale of a business. And some accountants provide business valuations, financial projections, budgets. They also take a look at strategies for securing financing. They can support you in planning for a succession of your business or your exit strategy. And also, it's always great to have someone in your corner if you ever find yourself in an audit situation with the Canada Revenue Agency. An accountant can help you through that. This is not a complete list of services, but it gives you an idea of the range of services offered. So I've just got a few benefits of having a bookkeeper that I want to highlight for you. Now that we've gone through what they do, how does it benefit you? So bookkeepers keep your financial records up to date. They help you to keep your finger on the pulse of your business. They provide basic financial reporting. Again, as I'd said, it was produced by the bookkeeping software. And they free up your time to work on your business because you're not spending your time recording the information when you've got someone in your corner to help you out with that. They provide expertise on day-to-day transactions. They see what is going on in your business on a regular basis and can provide you with some advice at that point in time. Bookkeepers also provide detailed, complete, accurate, organized, and consistent tracking. Let's talk about the benefits of having an accountant. Accountants recognize life events or business decisions that require tax solutions. They also offer expertise in accounting, tax, and compliance. For example, they can tell you when your business would need to register for a GST account. They can identify tax saving opportunities, particularly in personal tax. They can let you know the deductions available to you based on your family situation, if you're a single parent, caring for an aging family member in your home, or traveling to receive medical services. These are just a few examples of things that they can help out with on a tax side of things. The tax rules are changing every year, particularly with a change in government. So it's good to have somebody who's up to date on those tax changes that can provide you with information about what might apply to you this year on your tax return. Accountants can alert you to items that may require legal advice or services, such as contracts with people you've hired to work as independent contractors rather than employees, or a change in shareholders of your corporation. It's not that accountants do legal work, but that they know the signs of specific transactions that would require some legal advice, and they can point you in the right direction. Accountants also help you to make sense of your financial information. They can interpret your financial statements and tell you the story that your financial reports are telling you about your business. They can help the business owner to understand the impact of their financial decisions as well. Accountants provide reports that bring key financial indicators together. It's important to note that having money in your bank account should not be the only indicator of your business's profitability. Accountants provide a big picture view of your financial information. And they can identify opportunities for growth or recognize problems early on. They help to develop best business practices. They can provide you with valuable input on key decisions and help the business owner to plan for a strong financial future of the business through forecasting and tax planning. Again, these are not exhaustive lists, but just wanting to give you some idea of what each accountants and bookkeepers can help you out with. And how do bookkeepers and accountants work together to benefit your business? A good bookkeeper can alert you or your accountant to items that may need professional advice. Accountants can provide support, feedback, and advice to bookkeepers for recording the business transactions, particularly in complex situations. Quality data produced by the bookkeeper allows the accountant to provide quality information and advice to the business owner. If we remember that pyramid, the bookkeeper provides that solid bookkeeping foundation so that the accountant can build on that and give quality information and advice to you. Also, timely bookkeeping allows the accountant to meet filing deadlines for income taxes, and this allows time for financial and tax planning strategies. What about doing the bookkeeping yourself? You might find yourself in this situation, but hope not, but it can be pretty stressful to do your own bookkeeping or to recognize that it's just not in your wheelhouse to do bookkeeping. As your business grows, you may find that you no longer have time to do your own bookkeeping. You may experience unnecessary frustration and stress if your bookkeeping falls behind. In the area of income taxes, you may be making business decisions without considering tax implications, or you may be missing out on some tax-saving opportunities. You may be unaware of how changes in your business require some tax planning. And you may need advice regarding best business and record-keeping practices to avoid major issues down the road. For example, if you're claiming vehicle expenses for your business on your tax return, Canada Revenue Agency requires you to keep a mileage log for the year. Also, they require that you keep itemized receipts of your business expenses, not just the credit card slip. You have a potential for missed filing deadlines for sales taxes or income taxes. There's a potential for missed tax saving opportunities as well. And if you do find yourself in that audit situation, you're in it alone if you don't have someone on your team to help you through that, like a bookkeeper or an accountant. If you're not a detail-oriented person, you increase the risk of errors in your bookkeeping. And that may lead to further costs when the accountant has to correct your bookkeeping when they go to do your tax returns. It takes away the focus from your business activities and the planning of how you want to run your business. when you're spending your time on bookkeeping instead. You're not making decisions with a clear view of the financial health of the business if your bookkeeping isn't caught up to date, or if you don't understand the reports that are coming out of the bookkeeping and know how to interpret them to make good business decisions, which may result in some missed business growth opportunities. There's also the potential for errors in recording sales taxes, payroll deductions. Things like this have some complex rules behind them in varying situations. You don't want to land yourself in hot water with litigation or audit. So what would be the best fit for your business? Where do you start looking? The advantage of doing your own bookkeeping and tax return is obviously the initial cost savings. But like we talked about before, it could result in more costs down the road. Doing your own works well if you have the time, the knowledge, and the patience to do it yourself. If you do decide to do your own bookkeeping, a bookkeeper may be able to provide you with some training so that you can do your own bookkeeping more confidently and accurately. I'd also recommend a bookkeeping or income tax course, particularly looking at the sales taxes and payroll rules, because again, you can get yourself into a sticky situation if you don't know all the nuances involved with sales taxes and payroll. And it's a good idea, if you're going to do your own, to set aside time on a regular basis to work on your bookkeeping so that it doesn't pile up. But if you find that your bookkeeping is piling up, or that the DIY route is not your best use of your time, you may want to hire a bookkeeper. Referrals are a great place to start in looking for a bookkeeper. I recommend looking to your network of business contacts. And as members of WESC, we have access to their referral program and membership directory. This can be a really good resource for you. If you're already working with an accountant or a lawyer, business advisor, or coach, they might be able to point you in the direction of a great bookkeeper, someone that they know provides excellent service and quality work. But when using a referral from a fellow business owner or any of the other sources I just mentioned, remember that you are looking for a bookkeeper who fits with you and your business. Just because a bookkeeper is a best fit for another business doesn't necessarily mean they are a best fit for you. A referral is a good starting point, but it should not be the only thing that you consider when choosing a bookkeeper. And this applies when you're hiring an accountant as well. I recommend taking similar steps as if you were hiring an employee. You are adding someone to your business team after all. Decide exactly what you need from your bookkeeper and look for someone who provides those services. Consider asking for references or examples of client success stories. Maybe do a background business check, or arrange to meet the bookkeeper in person, or in our current situation, by video or phone call. Ask about their credentials and experience. Do they specialize in your industry? A good bookkeeper will have a combination of relevant training and solid work experience, and they will behave in a professional, ethical manner. When you meet with the bookkeeper, ask about the service options available to you and what you can expect your investment cost to be. Some bookkeepers charge a set monthly fee, but most bookkeepers charge a rate based on the time they spend. So in that scenario, ask what you can do to help to reduce the bookkeeper's time. Something as simple as organizing and labeling your source documents and bank statements may help to increase the bookkeeper's data entry efficiency, and this will take some time on your part, but you can save some money in hourly bookkeeping fees. But don't just focus on the cost. Make sure you're getting the best value for your dollar. Look for a bookkeeper who will provide the services that fit your needs. Maybe they offer additional services such as monthly meetings to review reports with you and explain the results. They could offer budgeting or cash flow planning assistance. If you have employees, you want to look for a bookkeeper with a solid knowledge of payroll, who has the necessary training to prepare the paychecks, payroll remittances, and annual T4 filings. Not all bookkeepers offer these services, so you need to know what is included in their service package and what is not. And when you find that best fit bookkeeper, get an agreement in writing that outlines the scope of the work, the fees, and the expectations. There are some crucial points in your business where you should be contacting an accountant for advice. When you're initially setting up your business and you've got questions about structuring your business, that's a great time to get in touch with an accountant for some solid advice. Any major life events or changes in your business, purchasing or selling a business, or even some major assets, expanding into a new jurisdiction, changing ownership and succession planning. If there are new business partners or someone retires out of your business, it's a good opportunity to chat with your accountant and make sure that you understand the implications of these decisions. Again, this is not a complete list, but it highlights some of the points to consider. When your business is starting, an accountant can provide you with valuable advice about setting up the appropriate business structure, and this can save you costs and legal issues down the road. Your business structure may need to change as your business grows, so it's a good idea to talk to your accountant about this. The timing of changing your business structure and the type of structure have various implications. There are legal and tax considerations, as well as the effects on your bookkeeping and accounting. It's a major change that requires some solid professional advice. When choosing an accountant, ask for references again or client success stories, and check with the professional association to see if the member is in good standing. Accounting is a regulated industry where chartered professional accountants must meet certain ongoing standards for training and ethical practices. It's also a good idea to ask for a quote. Some accountants offer service packages at a fixed rate, which makes budgeting for these costs much easier, but most accountants will charge you an hourly rate for their services. If you're hiring a sole practitioner without any staff in their office, ask if they offer different rates for the various services that they provide. If you're hiring an accounting firm with staff in their office, recognize that services such as bookkeeping or personal tax returns will likely be prepared by a junior staff member, not the partner or owner of the firm. This helps to keep the fees more reasonable and ensures that accountants' time is spent on the services requiring the expertise of a professional, such as tax planning strategies. Depending on the size of the firm, the partner may review the work of the junior staff member or have a senior member or manager review it. You should know which members of the firm you'll be working with. And ask about the availability of your accountant and bookkeeper in case you have questions that you need to ask them. Will you arrange to meet periodically with them, or can you call any time when you need advice? If you're contemplating a major business decision, it would be better to get advice sooner rather than later. And is this included in the quoted price? But don't just focus on the price when building your business support team. Look for someone who is professional, friendly, and honest, who takes a genuine interest in your business. If they don't have any questions for you about your business, move on. The more involved they are, the better value you are getting. Be sure to find an accountant and bookkeeper that will speak to you in plain English and are willing to explain concepts to you in an easy to understand way. You need to be comfortable with asking questions of them. Look for an accountant or bookkeeper that focuses on businesses of your size, in your industry, or your specialized area to provide you with a best fit. You need to be able to have a good personality match and be able to communicate well with your bookkeeper and accountant. this should be a person that you can envision being on your business team of advisors for the long term. So here's the bottom line. Bookkeepers and accountants both offer different but valuable services to benefit your business. You need to invest either your time or your money into the upkeep of your financial records and filing your tax return. Do it yourself only if you have the know-how and the time. A best fit accountant and bookkeeper team will contribute to the long-term financial success of your business. They can save you money and time in the long run. So spend your money and your time wisely. Take advantage of the expertise available to you. So it's just a short presentation today. If you've got any questions, I will take them in the chat box. Anything general, please type your question in. Again, if you have anything specific that you need to know about your business or your particular tax situation, I've got my contact information right here. Please get in touch with me. I'd be happy to help you out with any questions that you have, particularly if you're looking for an accountant or a bookkeeper. My firm provides both services, but not just like you're looking for a best fit for your business. Not all clients are a best fit for my business. And if they're not, I can certainly refer you on to somebody who is in my network. So I'm just looking at the chat box here. I see we've got some people typing, so I'll just give you a minute to type your questions out. I welcome your feedback too. Did you find this information helpful? And what type of information are you wanting to learn about bookkeepers and accountants? All right, I've got a question here from Nita. Do bookkeepers need to be a CPA? Not necessarily. Accountants, there are accountants out there who are not designated as CPAs. Bookkeepers do not have a similar designation. They do have, professional membership groups that they can be a part of voluntarily. But if you are working with an accountant, I do highly recommend working with a CPA because they are a part of a professional association that I would say keeps them accountable to the public and stresses their responsibility to the public. Kate asks, she says, I'm a new business here, wondering how I track and record home office expense now that I'm stationed from home, but now not earning income due to COVID-19. Great question, Kate. So if you have a new business, Canada Revenue Agency looks at, is your business structured so that it is a view to profit, is sort of their terminology. And if you have structured your business in a way that even though due to the current circumstances, you are not generating any income, but you have a business plan in place, you have set yourself up as a business, you've done your marketing and you're devoting your time to that. These are all factors that Canada Revenue Agency considers in, are you a business? And the reason I bring that up is because there's a difference between what you can claim for expenses, because you need to be considered a business. If you're not considered a business, you're considered a hobby. And those activities, whatever income that you're creating from that, you have to report the income, but you don't get to claim any expenses. So it's important to position yourself as a business, because being considered a business allows you to claim expenses. Now, if you're working from home for your business, There are a variety of home expenses that you can claim if that's your principal place of business. That is where you are running your business from. It's, obviously people aren't meeting with in person with anyone right now, but it's where you would meet or hold your meetings with your customers or clients. And so the expenses that you can claim for your home would be your utility costs. If you have a mortgage on your home, it would be your mortgage interest. And if you're renting your home, it would be the rent of your home. Also, if you're paying property taxes, those all combine to be the total expenses of which you will claim a portion. You need to take a look at what is the square footage of my home that is designated as my home office. It has no other use. It's not your kitchen table. It's your office space that is designated for business purposes only. You take that square footage and you divide it by the total square footage of your home, and you apply that percentage to the total expenses that I had just listed in order to get the home office expenses that you can claim on your tax return. So a long answer to your question, Kate. I hope that helps. Margie asks, I do my own books, but I have an accountant for year end. I do not use a program, make my own spreadsheets. Is there a crash course to take and where? So using a spreadsheet is a great place to start, Margie. It does track your information, but it doesn't give you anything. You need to find a system that loves you back, because spreadsheets do track what you need, but they just don't love you back. They do not provide any valuable reporting out of that. They just provide you with a summary at the end, but there's no way to easily view that data in different ways, in different reports, to get the information that will benefit you in your business. So in answer to your question about a crash course to take, you can definitely learn various bookkeeping softwares. There's a lot out there, and most of them have various free training videos online. That will teach you how to use their product. It will not teach you good bookkeeping, I want to say best practices. So I would say it's best to connect with somebody who does provide training courses so that you can get a bit of both. You can learn the software and you can learn how to properly enter your information and how to get the reports that you need that will provide you with the best information for your business. In my firm, for example, I do provide training services to my clients so that they can learn how to use the bookkeeping software. In my firm, I use QuickBooks Online, and that they can get a good sense of, am I recording my information properly? So I recommend that you look for somebody in your network that provides those types of services if you're wanting to make the switch to a bookkeeping software. So I hope that helps to answer your question there. I'll just give you guys a few more minutes to type any other questions that you might have. I think we'll maybe wrap up in about 5 minutes or so. So if you do have any more questions, please feel free to share them with me. Okay, Melissa asks, what are your thoughts about Sage 50 software versus QuickBooks? So thanks for your question, Melissa. I have been, I was raised on QuickBooks, so I have a propensity to go towards QuickBooks. I do use Sage 50. I am familiar with an older version of it. I have not attempted the online version, so I can't speak to that. Sage is excellent at keeping what I call an audit trail. So when you enter something in Sage, you cannot delete what you have entered, but you can reverse what you've done and correct it. So Sage keeps a good record of what's been done and what was changed. Whereas QuickBooks allows you a lot more flexibility. If you enter something incorrectly, you can delete it, but then it doesn't keep a record. So there is a caution there with QuickBooks Online that you need to be aware of, or with any QuickBooks product, desktop as well. But otherwise, I find that they're both fairly user-friendly. I find that the QuickBooks platform is a little bit more user-friendly for people who aren't familiar with the back end of bookkeeping. And Sage 50, I think you need to kind of have a better understanding of how bookkeeping works. Whereas QuickBooks makes it a little bit easier for any business owner without a bookkeeping background to sort of take that and run with it. Again, caution there, you need to have that background information to know that you're entering things properly. But both excellent products. My preference has always been for QuickBooks Online just because of the user friendliness and just my own familiarity. All right. I don't see any other questions popping up here or anyone else typing. So with that, I'd just like to say thank you for attending the webinar today. It was just a quick one for us. I hope that I helped to shed some light on the world of bookkeeping and accounting for you. And if you have any other questions that are specific to your business, don't be afraid to get in touch with me. I'm happy to help out. That's one of the things that I have a real passion for, is answering questions for small business owners. I see we've got a few people typing, so I'm just going to give you a minute to finish your thought there and see if we've got any other questions. Lisa says, excellent presentation. Thank you. Thanks, Lisa, for joining us. And I see you're all sort of typing in here that you enjoyed the presentation, so that's great. Yes, you can contact me through LinkedIn or Facebook as well. And I'd like to take this opportunity to say thank you to Wesk for inviting me to present to you. I really enjoyed our time together, and I wish you every success in your business.
Great. Thanks so much, Natalie, for taking the time to share with us today. I also want to say thank you to everyone that was able to join us on today's webinar. You'll be able to view this webinar on demand on our website by the end of the day today. Our next upcoming webinar is next Wednesday, and the topic is the customer life cycle. Registration is now open on our website. Bye, everyone, and have a great afternoon.